Hello traders, Gary Wagner here. Just about 11:40 in Honolulu, 4:40 in New York. It is Tuesday, January 31st, 2017, and this is the Daily Report for Gold and Silver. We have had a key reversal in market sentiment, and safe haven assets have definitely come back in favor as we witness weakness in the U.S. equities markets. Also, we put out a special trade alert yesterday recommending that all subscribers initiate long positions in gold. Gold was trading at 1203 at the time. We will cover that trade as well as our stop placement and upside target when we pull up our first chart. But first, to price changes in the precious metals. Gold closing up over $16 on the day. We are looking at the COMEX contract of April 2017 gold, which settled at 1240, a net change of 1640. High on the day has been 1217 with a low of 1195 on the day. Net change up about 1.4%. Silver also shining extremely bright today, closing up almost 2.5% on the day to close at 1757. Low on the day is 1710 with a high of 1763. So traders, the first chart that I do want to look at on today's show is a weekly chart, and we are looking at the gold futures, but this still being most active, so it is in essence a spot price is currently at $1209, $1210, up about $17 on the day. But the one thing that I do want to point out is the fact that after seeing a tremendous amount of pressure being exerted to gold prices last week, and that's this large red candle in which we actually identified an engulfing bearish pattern, we certainly did not see any kind of confirming candle. And if anything, this current week and this most recent action is negating any kind of information that we would typically derive from this candlestick pattern. But traders, most importantly, I do want to take a look at the chart that I sent out yesterday during the trade alert. It is a 60-minute chart. It is also in Japanese average format. I will use that in terms of market timing when I'm looking to enter the market and to look for specific targets and entry points. Now, here is the key. Of course, we saw this market move up dramatically, come back down and test this area, this being right at around $1,200 here. It then moved back up for that double top at about $1,220, and that's where the market stalled. From there, the market absolutely retraced, but the interesting thing is that most recently, over the last couple of days, as the market was moving down, we saw that when it hit this area of about 1180, we absolutely could see that there was real support that was coming in the market, and that also lined up with a 38% retracement, and that, of course, is a retracement of this rally that began really at the end of last year, beginning of this year. Now, my sense was that this was a great point to look at for a potential bottom, but I wanted some sort of confirmation, and the confirmation was absolutely received when the market began to break out and then trade above the 23% retracement level. That comes in just below 1200. So as this market was moving up at approximately 1203 in terms of price, which correlated to 1200 in spot, I did send out a recommendation to initiate long positions in gold, and I also recommended that stops needed to be placed below 1180, which was the most recent low. And so traders, based upon the criteria we just spoke about, we initiated long positions in gold, and I've already explained why we placed our stop where we placed it. And now, most importantly, I want to briefly talk about our exit strategy and our upside target. Now, I am under the assumption in terms of my current model that we've had some sort of a wave 1, a very, very shallow correction would be a 2, and we are now moving into a impulse wave 3. Now, in terms of Elliott wave theory, waves wave number 3 in terms of the impulse cannot be the smallest of any of the impulse waves, which is why I've created this fib extension. If you recall, we did actually put this up on Friday. We're going to need to address the fact that this is based upon a move to the 61% retracement level as opposed to 38. So the price target will actually be a little bit higher than 1263. But based upon this model, I believe that we could see gold go as high as maybe 1280 on this move. And our essential target right now is going to be around 1260 to 1280. Of course, that is something that we'll discuss in detail as we get deeper into the trade. In other markets that we follow, Dow Jones Industrial Average continues to soften, and as it has broken through that 20,000 mark a few days ago, we are now in our third consecutive day of lower pricing in U.S. equities, with the Dow closing off about 100 points today at 19,864. All other major indexes were lower on the day. And the other very noteworthy aspect to markets that we follow today has to be the U.S. dollar, which is traded under tremendous weakness, selling off by about 0.8%, well below 100, to settle at 99.59. So traders, in terms of other markets that we do follow, the U.S. dollar is something that is essential, especially for our gold trade. We've talked about the fact, this is a weekly chart, by the way, but we've talked about the fact that we saw some real intrinsic weakness in the dollar. And since that point, we've also witnessed it move down about 4% from this high above 103, 103.61 to be exact. And we're now at a first level where we can look to see if any kind of support comes in, and that's roughly at 99 on the dollar index. Now, should the market actually move below that point, the next real level that we're going to want to look at comes in just below 98. And then below that would be 94. So there is tremendous room on the downside in terms of a technical basis to see continued dollar weakness. And depending on how it acts right here at 99, if it does break through this price point, I think we are headed not dramatically lower, but at least a couple more percent. There's absolutely no doubt, traders, but the recent bout of uncertainty that really has been created by new policies of President Trump on not only immigration, but on U.S. trade have not only weakened the dollar, have taken that short-term optimism that we saw in U.S. equities and kind of turned it on its head. We've seen a major pivot there and a change of market sentiment, and also put safe haven investments and assets back into favor. We made a recommendation. We entered the market from the long side at 1203. We want to maintain our current stop, which is below the recent lows at 1180. We've defined our upside target, and we will work with you closely throughout this trade. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review.